Boosting wealth management and therefore fee income has been an appealing proposition for many banking groups since the financial crisis. But is this still the case? I am asking Luigi Pigorini, Citi Private Bank's Regional Head for Europe, the Middle East and Africa. Luigi, thank you for joining me.
Thank you, Silvia.
So wealth management has really been quite an interesting business for many banks since the financial crisis because of its appeal as a fee income generator. But recently we've seen groups shutting down or reducing their presence in this space also because of money laundering accusations. We have seen the HSBC case in Switzerland a couple of years ago, again HSBC in Mexico. But do you think that wealth management will continue to be of such an importance to banking groups in the future, or is it going to play a muted role?
Good wealth management businesses with good business models can provide a very high quality of earnings. Okay? It's important that the operating efficiency ratios are low. It's important that the return on capital can be very high. And if you run a wealth management business in a large bank and you achieve both these two things, then the wealth management business remains a core and strategic part of that large bank. That's the way it should be. Now, to run well a wealth management business, I think that there's 2 or 3 key components that you have to keep in mind. First of all, you have to be maniacal about the target market that you serve. Which is extremely important. You cannot be all things to all people. So you have to choose your target market. Secondly, you have to, in today's day and age, be able to absorb the deluge of regulation that is coming down the pipe, and you have to manage it well. And if you manage your regulation well, and if you're essentially able to stay out of trouble, you've reached an enormous competitive advantage.
How many groups do you think will have appetite to do this? Because you can select your markets, that's fine, but managing regulation is becoming an increasingly time-consuming and costly exercise.
I think you'll end up having a handful of groups that will compete on a global basis. And I think you'll then have lots of players that compete on a local basis. I think there will be more people that will exit the industry.
Okay, and some data show that last year was a boom year for M&As in this space in wealth management. Do you think that the consolidation will continue then, both at a global level and a smaller level?
Absolutely. I think that there will continue to be consolidation. It's just the forces of the industry are such that they're pushing the marginal players to either deeply restructure or exit the industry.
I know that this is probably not too relevant to your business because, again, we say that you focus on the high clients, but what about newcomers coming in? The ultra, not just the high, the ultra. High net worth individuals. Yeah. What about newcomers coming into this space and targeting the affluent segments? How much of a threat do they pose to the whole area?
It's a very difficult proposition. Mm-hmm. It's a very difficult proposition. You either have a critical mass from the start, or it's going to be almost impossible to compete in this space. So
they still have some
the barriers to entry are just too high.
Very good. Thank you very much for your comments.
You're very welcome.